Now we've reached the third episode of When Time is Money. Once again, I have the pleasure of sitting next to Daniel, and today we're going to talk about investing in watches. I think a good place to start is by hearing what the watch market looks like today.
Well, today we've fortunately landed what I consider to be a really good and healthy place. We've been through some intense years with some dramatic increases in value from 2019 to 2022. That is during COVID and immediately after. Rolex watches, for example, increased in value by about 90% over those 3 years. That's simply too extreme. We want to make money for our investment clients, just as we also want to make money ourselves, but it becomes too much with such large increases in such a short time. So, of course, at some point, the market has to correct itself, and that's what has happened since then. So today, you're left with about a 30% increase in value over the last 5 years, as opposed to the 90% in the first 3. And that's actually really healthy. It's healthy both for our investment clients and for us. Our investment clients in Ongoing Invest, which I know we'll talk more about later, make a living by selling watches from their portfolio. And funnily enough, that's exactly what we do as watch dealers as well. So that means, based on the idea that it's probably a bit easier for us and for the market to sell 10 Rolex Hulks at 140,000 today than it was to sell one at 250,000 a year and a half ago. Well, that means the market has opened up again. The floodgates are open. In Q1, we haven't had nearly as high earnings as we would have liked here in the business, but we've actually had over 50% above the budgeted turnover, which says something about the market moving again, that trading is happening at healthy values, and that maybe there's a bit less speculation and in return, a bit more actual trading. And we actually think those are some really healthy trends. So the market is in a good place. Of course, we do dream a bit about the times when we could just post a watch on Facebook and 8 seconds later it was sold. These days, it can easily take 48 hours before that watch is sold. It can also take longer or it can be shorter, but we can definitely feel that momentum is coming back without things overheating in the same way as they did 3 years ago. So I actually see the market as being in a really healthy place, and we're back at price levels where many more people can participate, and where many more dare to trade their watches, both in exchanges and, of course, in regular transactions.
You just mentioned that Rolex has increased in value by 90% over the last 3 years.
Not the last 3 years, but from 2019 to 2022. According to the sources we follow and our own estimates, the watches in total, newer Rolex watches in total, increased by about 90% in value. And of course, that's too much, because at some point, such a dramatic increase has to be corrected. But I think we find the answer to this very dramatic increase in a truly unique, perfect storm caused by COVID. People are sitting at home, they feel comfortable trading watches, and they want to invest in something safe. Not everyone wants to have a gold bar lying around, so they look for another safe and secure haven. And that could very well be an easily tradable, easily portable Rolex watch. We have to remember that we were all caught up in doomsday prepping and masks and all sorts of things. And there's no doubt that at that time, it perhaps felt safer to have your watch, or rather your money, on your wrist than to keep your money in the bank or in a bond or something else entirely. So that naturally meant that a lot of people turned to watches at the same time as they were saving up. People saved up incredibly quickly, especially in the Western world. For obvious reasons, there weren't many trips being taken. There weren't many cafe visits either. All of a sudden, there was a lot of extra money that needed to be put into something. And once again, Rolex watches became a welcome option, especially based on the solid track record they had in the previous years with healthy annual increases of 5, 10, 15%. And then, of course, we reach a point where we test where the ceiling is, value-wise, when it rises by 90% in such a market or in that part of the market over these 3 years. So even today, after a sharp correction the year before last, we actually still stand here having gained about 30% more in value over these 5 years from 2019 up until now. So the watches have come out of it extremely well, despite being used as a financial tool at a level we definitely haven't seen before. And in that way, I also think it was something of a baptism by fire, both for us at UrHandleren and Invest, but really also for the manifestation of a financial market created on the basis of watches.
Why should I dare to trade my watch now instead of waiting a few months to see if the market drops further?
Of course, we are subjective in that sense. We make a living by selling watches, and we want to sell watches today. That being said, I still think that, objectively speaking, we are in a market right now where it makes a lot of sense to buy in. As recently as 4 hours ago, we received the latest report from Watch Charge, which shows that over the past 7 days, we are up 0.3% on the overall Rolex index, and 0.3% isn't much. But after all, that's 15% a year, depending on how you calculate it. But it's very indicative of what we're experiencing at the moment, namely higher sales than expected. And with higher sales in a market with limited supply, there are often some price adjustments on the positive side, which we have already seen on several of the models we trade. So if you're going to buy the dip, I think it's about the last call. Of course, you could listen to this podcast in half a year and think that we were complete clowns or that we were incredibly smart. You have to be careful about predicting the future, and there are no guarantees here either. But based on our combined knowledge, our overall understanding of both the macroeconomic conditions and not least the market we operate in every day, namely the watch market, both internationally and here at home, it definitely suggests that there are strong tendencies to buy while the market is as cheap as it is right now. So I would be careful about waiting any longer, because once you've found your Rolex Submariner with a date brand new for 105 or 110,000, well, then something happens mentally that hurts if you look again when you come back from summer vacation at the end of July, and then it costs 120,000 if that should be the case. So I would, in any case, with a clear conscience, advise the individual customer to buy their watch now. I see a lot of good reasons to do it now, just as, to be honest, we could also see several reasons last year to maybe wait a quarter or two, which also meant that we had very poor sales. Not just us, but the whole industry, both nationally and internationally last year, a disappointing turnover compared to expectations. And of course, that was because people were waiting and seeing how things would develop. And now we've kind of waited and seen. Now we're out on the other side of this tunnel, and it's like we're standing out in the light now, and the last cloud is kind of drifting away from the sun. And I think to stick with the terminology of sun, moon, and stars, that's where we are now. That now is probably the time when you should press the button and dare to buy your watch.
It's no secret that a lot of things are happening in the world right now. Both with the election in the US and we have the EU elections coming up soon, there are several wars going on around the world. It does feel like an uncertain time.
Well, it is definitely an uncertain time, both with war and the economic conditions that result from that and all sorts of other things and the aftermath of COVID and who knows what else. But as we usually say when it comes to watches, they do extremely well in good times. They just tend to do even better in tough times. That's also why they're really good as an investment tool to hedge yourself if you're heavily exposed to stocks, which perform best in good times. Well, then it can be a good way to hedge yourself strategically and have a certain portfolio of watches, which can also perform in bad times because people tend to seek out safe havens. People look for capital preservation in something safe, easy to handle, easy to move, and easy to sell. Just as we also saw during COVID when watches, at least in the case of Rolex, increased by about 90%. So especially if we are heading into a time that isn't necessarily a super positive world order or a particularly good period, well, then I think it makes good sense to enjoy wearing a watch or two on your wrist and maybe also have a few tucked away in the safe. At least that's our view on the matter. So in good times, watches are really great. There are a lot of end customers who want to go out and get themselves a new watch. And Master Mason Hansen wants to celebrate his good annual results with a lovely watch for his wife. And that's also really, really fantastic. But in tough times, there are some heavy hitters, both men and women, in the financial market who are also looking for secure capital preservation. And in those times, watches are also important. So that we can experience, just as we did during the last crisis, that the clocks actually rise sharply, the more difficult it becomes to trade or bet on your stocks and similar financial instruments.
If someone is sitting here and getting a bit inspired to start investing in watches, what are the prerequisites for doing that?
Well, first and foremost, the prerequisite is that you have the means to create this diversity and risk spreading in your portfolio, which I always talk about. There's nothing wrong with having savings of 400,000 and then putting 100 of them into a watch that's covered by your home insurance, provided, of course, that you have double-checked and verified it. I see nothing wrong with that, but from a more professional investor's perspective, it's definitely important that you don't necessarily invest in watches for, let's say, 800,000, and then have 1.5 or 2 watches lying at home, and then you have these 2 eggs in one basket and just hope for the best. I would say it takes a bit more than that because the watches are so expensive per piece as they are. So it's a bit like buying some very, 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 very expensive individual stocks, and expensive in the sense that they are very costly. And it's rare that you go down to the bank and are told that you should buy these three stocks, one of each, and then go home and hope for the best. And again, there needs to be some strategy. Should we do what we're best at? Well, if we want to achieve this diversity in the portfolio, then it actually takes quite a few watches. So if you think like a semi-professional or professional investor, well, then we're definitely talking about more than 1 million and preferably quite a bit higher before we feel more comfortable that, yes, you're covered in relation to the market. Simply because a single steel submariner costs around 100,000 and you need a selection of different models from various manufacturers before you have the level of security that people are looking for when it comes to watches. So I would be cautious about buying just one or two as a professional investor, but as a private individual, I would definitely trust the capital preservation in watches compared to thinking about capital preservation in cars or wines or other things, which also perform fantastically well, but which may also prove to be more volatile over time than watches.
If an individual wants to buy a single watch right now, which model would you recommend then?
Well, if I had to pick one right here and now, honestly, I actually think that as the market stands right now, there are really, really, really many beautiful watches that make good sense both as investments and aesthetically. But if I had to highlight one that we have in stock over at the shop across the street today, it would probably have to be a brand new Rolex Pepsi in white gold with this very distinctive meteorite dial, which is actually, yes, the dial of the watch is made from this piece of meteorite that landed somewhere on Earth, purchased by Rolex, and then acid treated so that it could be used as the dial in this watch. And of course, it's completely unique. It's a watch that a couple of years ago we sold for between 700,000 and 800,000, if not even more expensive. Right now, we have a brand new one for sale in the shop for under 400,000. I would say that this is not a watch I expect to see drop much further in value, while at the same time it has great investment potential, and it's also hardly a watch your neighbor owns. And most importantly, in a country like Denmark, it also flies a bit under the radar because it's white gold rather than yellow gold or rose gold. So that means at first glance, unless you're an expert, it doesn't really stand out. And that's something a lot of people actually like. Those who keep a low profile in this country tend to live well. So if I had to highlight a single watch we have in stock at a fantastic price, which in my opinion is also a good investment, it would be this one. Then it would have to be the Rolex Meteorite Pepsi in white gold. A beloved child has many names.
But Daniel, maybe we should actually do an episode or two that focuses solely on UrHandleren and Invest.
I think that's a really good idea because I'm terribly afraid of ending up boring some of our listeners. At the same time, I really want to go in depth about exactly what it is we focus on at UrHandleren and Invest. I think we'll come back, as you mentioned, with an episode or two where we talk a bit more about our investment concepts and the story behind them. And of course, even more market data so you can make an informed decision about whether or not you should get involved in watches.
We're always curious to hear what questions you have on your mind, so we'll take a couple of listener questions now. The first one goes like this: how do you create an investment portfolio?
Of course, we do this in close collaboration with the investment client who wishes to work with us. That means we sit down and have a good conversation with them about their risk profile and investment strategy, and not least, how long-term an investment they are considering making. And based on those criteria, and of course our market know-how, we then put together a portfolio. So there is no such thing as the perfect watch portfolio that everyone could just buy into, if you ask me, just as there isn't necessarily the perfect stock composition or the perfect index to invest in, because it's so individual how you set your strategy and how you act when it comes to risk tolerance and everything else. So as soon as we have those factors in place with the individual investment client, we naturally start putting together an investment portfolio, and that's always characteristic of such an engagement. Of course, there is a certain level of diversity, meaning a certain risk diversification that always must and should be present. And that's also why it's extremely difficult for us to put together a portfolio of, let's say, under 1 million kroner, because the watches are so expensive per piece that there's simply not enough budget to achieve this risk diversification. If there are only 2 or 3 watches in an entire investment.
There's another listener who would like to know which watches are expected to have the best investment returns over the next 5 to 10 years.
Yes, that's a really good question. That's something we would all like to know. We would all like to be able to predict the future. If we look back, and we should do that, if we want to look ahead, we have to start by looking back. And if we look at it historically, well, then Rolex has, of course, performed extremely well over the past 10 years. But Audemars Piguet and Patek Philippe, at least during the period when the market was at its hottest, when turnover was highest and value increases were greatest, have performed even better. On the other hand, we can also see that when things underwent a slight correction the year before last, it was also Audemars Piguet and Patek Philippe that were the first to be hit with significant price reductions. So if we look ahead to the next 5 to 10 years, well, then on that front, I would definitely talk about a combination of the three major brands. They also have in common that none of them are particularly commercially owned in the sense that we're talking about two family-run businesses and a foundation-based Rolex. So these are companies that carry a tremendous amount of values, rules, ethics, and all sorts of other things with them on a completely different level than many others in this industry and in many other industries. So all in all, I would probably say that the safest bet over the next 5 to 10 years, well, it's the big three. Also because we have such a large target group that has had their first Rolex and their second Rolex and maybe even their platinum Rolex and are actually ready to move up the ranks towards something even more valuable from Audemars Piguet and Patek. And the latter two manufacturers produce around 40 to 60,000 watches a year, which is, yes, just a tiny, tiny, tiny percentage of what Rolex produces annually. So their brand, or the awareness of their brand, is proportionally even greater compared to their production than Rolex. And based on that principle alone, I think the demand will be tremendous in the coming years, especially when we look at how many new wealthy individuals are about to be born around the world. So naturally, I would look at those two, and I would definitely also cover myself with a bit of Rolex in that context.
Are there any specific models within these brands that are known to have a good investment return rate?
Yes, well, if we set aside the very, very exotic pieces that are often traded at auctions and look at their somewhat more, let's call them regular products, if you can call them that, then I would definitely look at the Nautilus and Aquanaut series from Patek, as well as something from the Royal Oak line at Audemars Piguet. I might not focus as much on the Calatrava for most models at Patek, and I might also pay less attention to, for example, the Royal Oak Offshore at Audemars Piguet. Basically, the watches most commonly associated with the brand as their primary design look are also what I would look for, because that's definitely where, statistically speaking, the demand will be greatest. That's definitely where, historically, you'll find the highest premiums on individual models, just as has been the case with the Pepsi from Rolex or the Batman or similar models. So I would go for the very, very, very popular watches bought at the right price. If we're talking about individual watches and not an entire portfolio, if it were a portfolio, as I mentioned earlier, I would create more diversity around it and make sure we don't have all our eggs in one basket. But if we're talking about a single brand, then I would definitely choose the series that we see as representing their primary identity. That's the direction I would go.
Then there's a listener who would like to know which brands have historically held their value the best.
Well, historically speaking, it's a bit of the same discussion we've already had, Linnea. I would say that over time, there has been a very, very, very steady incline for Rolex over the years as it has become more and more popular over the last 15 years. But we also saw both Audemars Piguet and Patek Philippe rise proportionally even more than Rolex in the years leading up to the correction we experienced the year before last. On the other hand, they have also dropped more afterwards and are now trading again at the same level as they did about 3 or 4 years ago. So if we look again over time, well, then I think I would have felt most at ease if I had owned a Rolex, a popular Rolex watch over the past 10 years. I think you would feel that the roller coaster ride has been much more comfortable there than it necessarily has been with a Nautilus, which in some versions cost 1.7 million the year before last and can be bought today in the same version for under $1 million. So despite the fact that the market experienced a shake-up the year before last and last year, I would definitely say that over time, I think I would have felt most at ease owning a Rolex Hulk, for example. Almost no matter which year I bought it, whether it was in 13, 14, 15, 16, 17, or 18, well, it's still worth more today than what I paid for it back then. And we already knew that back then. In 17 and 18, we actually created investment packages or offered investment packages consisting exclusively of popular models from Rolex, primarily the Hulk, which was the main watch in those packages. And despite the fact that the Hulk was traded at much higher prices 2 or 3 years ago than today, it is still 50% more expensive now than it was back then. So there's no doubt that's probably the direction I would go if I had to choose something purely based on the last 10 years of history.
That was simply all we had time for this time. Thank you so much for listening.
Thanks for now.
Bye.